Let's connect with Harendra Kumar, Head of Institutional Broking and Global Research with Elara Capital. Harendra, morning. Thank you for joining us. Harendra, when we started the week, fear had taken center stage, but now risk just seems to be coming back. So what is the real market? The one which we reported last week or the one which we are reporting this week?
See, actually both are true. The macroeconomic reality is also true, and it is also true that the markets are oversold today. You know, the economic data did surprise, the news, the media, etc., and everybody on the street, but actually the market had priced in. You know, one point that had to be taken away was that India was oversold, and it is, the holding structure in Indian Nifty companies pretty concentrated in, so top 20-25 investors, be it domestic or FI investors. So that protects any capitulation in the market from from these levels, and the market volume was extremely low. So we did not expect a capitulation on the GDP number, though we expect the markets to trend or drift sideways to lower over the next 6 months. But to expect a capitulation on further deterioration numbers would be a little harsh given the state of the markets today.
What is driving capital goods stocks? This week, L&T is up about 5.5 to 6%. BHEL has appreciated, and also there is some price action in other engineering names as well.
Yeah, okay. So I think the capital goods space per se are, most of the investors in the street are not overweight. So what you are seeing is a trading zone for most of these stocks. But there is some selective buying on individual stocks like Cummins or, some of the other stocks. But potentially there is no long-term buyers looking at L&T or a BHEL. One thing that could benefit them in terms of is the rupee depreciation, which would make them competitive in terms of some of the Chinese imports that they are seeing. So potentially the street is looking at some improvement in fundamentals, at least in the power businesses. Apart from that, we don't see a structural shift in the way capital goods segment should trade today.
What do you think is the market pricing in by way of rate movement by the RBI on June 18th? And do you think in anticipation of a rate cut, there is a trading opportunity in any of the banking names?
Yeah, so I don't think about the rate cut is in anticipation. That is just speculation. As far as a house view is concerned, we think we are through with the rate cuts for the current financial year, or at least for this current calendar year. But yes, we have brought a study to show that some of the PSU banks have been beaten down, beyond their fundamentals, and some of the good PSU banks with good management of credit costs are trading at sub-book multiples. And potentially, if you could see that the rate cycle is turned, at least in this financial year, there could be good bets, because generally as rate cycle turns, PSU banks tend to outperform private banks, and there could be good long-term bets over the next 3 years.
Do you think the big move in SBI is now behind us? Because in quick time, State Bank of India has appreciated from what, 1850 to about 2200?
Yeah, pretty much. So I think the risk reward is not favorable currently at this given time horizon. So that trade has played out. But I think there are some opportunities available with other banking stocks like Jammu and Kashmir, or for that matter Federal Bank, Karur Vysya. So the smaller banks are looking very strong, and I think it's time probably to shift from some of the larger ones to a basket of smaller bank stocks.
So what do you like about Karur Vysya Bank? What do you like about Federal Bank? These banks don't have size, they don't have the balance sheet bandwidth, and also if I look at the ratios for a Federal Bank or for a Karur Vysya Bank, ordinary NIMs, 2%, 2.5%, book value also 1.5%. So what's the meat there?
Yeah, see, Nikunj, if you see the whole of India now today, the federal structure has gone very, very strong, and it is the chief ministers who are calling the shots. It is the state GDP which is pulling the national GDP. So I think the localized stories are much more stronger to play than the nationalized stories. And so these banks are very localized and aligned to the local business opportunities, know their consumers, their NPA coverage ratio is better. I think so there's very little volatility in their business fundamentals. So I think that potentially is what we should look at. And given the way the state story is going to pan out over the next 3-4 years, I think there'll be far better stories to play than the overall macro setup for large banks.
Harendra, do you like anything from the large cap PSU banking space minus SBI?
Yeah, so there is Allahabad Bank, which has come off significantly from its peak. So I think in terms of pure valuation play, that seems to be looking attractive at this given point of time.
Harinder, what did you make of Reliance's AGM, and what really has the market read in terms of the future trajectory of business fundamentals? Because this is one stock which has really underperformed all of last year.
Yeah, I think Mr. Ambani has given cues to the street and overall that you have to look beyond gas and for us to look at the stories. And there are significant investments in other areas in terms of regasification of petcoke, retail, the 4G, and the thrust was on the word EPS growth and on operating profits. So I think that is a very good lamppost for the entire street of how the direction is going to be. Whereas the previous 3 AGMs were very heavy on vision but very little focused on to the drill down into the numbers. I think that is pretty much the shift that this AGM has done. So where most of the times the AGMs we've seen the stock move up and then sell off. I think from here on investors would want to take a relook at this new investments and the trajectory and the execution of these investments.
I'm going to keep the market cap constraint open. Pick and choose from the large, mid or the small cap space, but what is your top idea where you are advising your clients to allocate disproportionate amount of money?
Okay, we particularly like Z Telefilms, going ahead into the next 18 months and the structural setup. So that could be one of the nifty stocks that is in our radar.
Are you advising your clients to buy or look into airline stocks? Now the story here is that industry dynamics are changing. There are only 3 players left. 3 players are getting pricing power back. Crude has declined, which means for airline companies which have a large debt problem because of drop in crude, that will be taken care of.
No, not at the moment. We're not even investing in this sector for research because I think the volatility will continue for some period of time, and we don't see stable earnings, and so do the investors.
So, from the mid-cap space, what is your top idea?
Like I said, we have, we were working on a top-down approach towards mid-caps as well. Some of the mid-cap bank stocks, mid-cap cement stocks. And particularly we are seeing some amount of turnarounds in some infrastructure stocks who are bottomed out. So that's pretty much our basket, and the picks could be anywhere from Jammu and Kashmir Bank to their networks to and Nagarjuna Construction, or for that matter an Orient Paper. So this would be kind of the bouquet that we would be advising clients on.
Harinder, what do you like in the traditional defensives, that is the pharma pack? Is there anything that you like over there and see significant upside, say in the next 6 to 12 months?
Yeah, we are overweight on Dr. Reddy's and Glenmark Pharma in the mid-cap space. So the pharma space looks very interesting. The healthcare index is at a 52-week high. I think that momentum will sustain going ahead.
Harinder, what is the real level for Tata Motors? It is certainly not 330, 340, and it is certainly not 220, 230.
Yeah, I think our analyst has had target price around 290 rupees, but I think that is on the moderate side. I would be among the bulls in the Tata Motors space. I think the whole macro setup in terms of the impetus towards diesel cars benefits Tata Motors a lot. And I think the global macroeconomic environment does not impact luxury cars to the extent that it impacts economy cars. So, and the balance sheet is aligned to a weak rupee today. So I think these positives will continue to play out. So there is volatility in GLR numbers and some amount of margin. So the stock was overheated, but I think buyers will come back into the stock, and I think the upward direction in the stock will likely continue.
Harinder, most of the large cap metal stocks are now trading below their replacement cost. In fact, Hindalco and Sterlite, if I look at the standalone book value, they are trading now below 1. Is there merit in being a contra buyer in any of the large cap metal stocks?
Actually, apart from Tata Steel, which we are still neutral, I think the only play that we have currently identified is Nalco. I think the alumina play is more attractive than the ferrous, or for that matter the non-ferrous. In the non-ferrous space, we like just Nalco. So very few opportunities in the middle space, because I think the demand structure and raw material structure is not positive at this given point of time. Yes, market is currently ignoring these stocks under own, but I think we'll get plenty of opportunities at least in the next 9 months to pick them at similar levels or probably lower.
And what makes you bullish on Tata Steel? Tata Steel is still sitting on a fat dollar-denominated loan. Chorus is still a question mark, and we know what is happening in Europe. What makes you neutral for that matter on Tata Steel?
Yeah, so the Indian operations are the ones which is very robust, and I think a small recovery, the delta that you saw in Tata Motors, very similar to that. I think if there is a recovery and things tend to improve, the delta for a Tata Steel is far higher. So it's more like to stay invested, rather than to be positively inclined towards the stock. So that is why we are neutral on the stock.